Welcome to the Cryptocurrency Investing Blueprint. My name is Tai Zen. In this module number 6, we will be talking about the cryptocurrency exit strategies. This will be the longest module in the entire Cryptocurrency Investing Blueprint. The reason why it's the longest module is because this is the module where we get the most questions from all our students. We try to answer all the questions that we can, and if there's any that we do not answer, we will answer them afterwards in the FAQ below this video. In this module, we have lots of objectives. We're going to talk about the exit theories versus the action steps required in trading. And we're going to talk about exit theory number 1 of what happened in the past bull markets. And we're going to talk about the past crypto bull markets and the past crypto market cycles. In exit theory number 2, we're going to talk about the window of opportunity to take profits, the previous windows of opportunity to take profits and what it looks like. And I'm going to share with you some notes about the window of opportunity to take profits. In exit theory number 3, I'm going to talk about the Taifu 3-bucket system. We're going to talk about bucket number 1, which is the long-term bucket, and what the purpose of that bucket is for. We're going to talk about the bucket number 2, which is the cash bucket, and what that cash bucket is going to be used for during a bear market. And then we're going to talk about the bucket number 3, which is the spending bucket. And that's the bucket where we actually use that money to pay for our bills and living expenses. We're going to talk about different examples of the Taifu 3-bucket system, depending upon what your goals and your objectives in your life is. And I'm going to share with you guys the notes about the Taifu 3-bucket system. In exit theory number 4, we're going to talk about the 3 stages of a bull market. We're going to talk about the bottom 1/3, the middle 1/3, and the top 1/3, the areas to buy and sell and hold, and things like that. I'll share with you guys notes on the 3 stages of a bull market. And then I'm going to share with you guys exit theory number 5, which is how to calculate your personal financial goals. This is one of the most important things that we need to do when we are trying to figure out how to take profits. If we don't know our personal financial goals, it's extremely difficult for anyone to help us, or even for yourself to know when to take profits correctly. I'm going to talk about exit theory number 6 and talk about the 2 types of market signals. They include the logical versus the emotional market signals. I'm going to share with you guys a list of the logical market signals. For example, logical market signal number 1 is your personal financial goals. Logical market signal number 2 is the angle of the market trend. Logical market signal number 3 is the angle of the portfolio trend. And then in signal number 4, we talk about the Bitcoin versus the USD charts. The signal number 5 is the trading volume. Signal number 6 is the market cap all-time highs. The signal number 7 is the Bitcoin dominance crashes. The signal number 8 is the market average true range, otherwise known as the ATR. Signal number 9 is the portfolio ATR. Signal number 10 is the coin ATR. And then I'm going to talk about the notes on the market, portfolio, and coin ATRs. And then I'm going to share with you guys signal number 11, which is the market ATR is greater than 35 degrees. The signal number 12, which is the portfolio ATR, which should be greater than or equal to 35 degrees. And then the signal number 13 is the coin ATR, which should be greater than or equal to 35 degrees. And then I'll share with you guys some notes on the market, portfolio, and the coin ATR angles, and you'll understand it a little bit more. And then I'm going to talk about the logical market signal number 14, which is the USDT markup rate, and how to calculate the USDT markup rate in Vietnamese dong, and how to calculate the USDT markup in Thai baht, and then the ideal USDT markup rates to take profits. And this is all part of market signal number 14. The logical market signal number 15 are the scam comments, and logical market signal number 16 is the promotional emails. The logical market signal scoring method that we use to score and know when to take profits. And then I'm going to talk about the exit theory number 7, which is the logical market signal scores. And then the logical market signal scoreboard is what we use to determine the scores. Now, all this sounds a lot of material, but when you see it, it's actually very simple. Lastly, I'm going to talk about the Taifu action steps. So based on the scoring methods that we use, it will determine the action steps that we take. So action step number 1 is to identify the market signals. Action step number 2 is to calculate the market signal scores. And then action step number 3 is to lock in small profits. And then action step number 4 is to reduce the total number of coins. And then action step number 5 is to lock in big profits. And then I'm going to talk about some of the notes that I have for you guys about cryptocurrency exit strategies. And then I'm going to share with you guys the case studies of the cryptocurrency exit strategies. So let's go ahead and get started. We have exit theories and we have action steps required. The cryptocurrency exit strategies module is made up of 2 parts. One part is the exit theory, which will teach us what happened in the past and what to expect to happen in the future. And then after we learn the theory portion or the exit theories, then we're going to take some action based on what we see in the markets. So the action steps will teach us what previous sell signals look like, how to identify them again in the future, and when to sell and take profits. And then how much profits do we take each time we sell. So the exit theories, there are 7 of them. And then the action steps, when we get to the end, when it's time to take action, there's 5 of them. So I'll cover each one in detail so that you guys understand it, so there's no questions and there's no confusion. In exit theory number 1, I want to talk about what happened in the past bull markets. Okay, so before we learn how to exit in or take profits on a trade, it's important we understand what happened in the past bull markets, because understanding the market signals, behaviors, and patterns from previous bull markets lets us know what to expect in the future bull markets. So let's look at some examples of past bull markets. I want you guys to be aware that the first few bull markets that happened in the cryptocurrency market only happened in Bitcoin. The reason why was because in the first few years that the cryptocurrency market was born, Bitcoin was either 100% of the entire market or it made up 99% of the entire market. So during the first few bull markets, we are not going to consider any altcoins or any other cryptocurrency besides Bitcoin. And there are several of them that we're going to look at. And I'm just going to go into detail on the first bull market here and the numbers and how to read it. And then afterwards, we will just take a quick glance at each successive bull market. And then you can pause the video and look at it in detail if you want. But there's no need for me to go into detail of each bull market because they are very similar. So in the first bull market here, it says that it started in July 12th of 2010, and then it went all the way to November 1st of 2010. It lasted 4 months, and the market grew 9x, or 910%, which is 9x, and it took 4 months, and the price went from 5 cents to 50 cents. So that was from here all the way over to here. The bear market began, and it crashed down to the low. In the first bear market, it went from November 1st to December 6th, which is just a little bit over a month, and the market crashed 66%, and we went from a 50-cent Bitcoin down to a 17-cent Bitcoin. It went down to 66%. So that's how you read these charts. Let's go and take a look at the second bull market. Now in the second bull market, you can see that the first bull market happened right here. It went up to here, and it crashed down 66%, and then it finally bottomed out, and then it started climbing back up to here. So in the second bull market, it started in December 6th, and it went all the way to February 7th of the next year, which is 2011, and it grew 547%, or a 5x gain, and it took about 4.25 months. And Bitcoin went from 17 cents to $1.10. So it broke $1 for the first time here in the second bull market. By the way, I'm counting the bear market as anything that is 50% or greater. I count it as a bear market for this educational purposes in the beginning. Later on, as the market matures, then we have to increase that 50% to like 60, 70%. But in the beginning, I would say that it's safe to say that a 50% crash is a bear market. In this particular case, it's only 49%, but it's close enough. So I'm going to count that too as the second bear market. So it took 4 months, and the market crashed from $1.10 down to 56 cents. So there goes from here, this green vertical line to this red line. That was one full bull market. And then from this red line to this, that's another bull market. So let's take a look at bull market number 3. So again, if we look out here, that first bull market is now just a flat line, and the second bull market is also just a flat line, because that shows you the exponential growth in Bitcoin. So in this third bull market here, it went from April 4th to June 6th, which is about 4.25 months, and it grew 5,579% or a 56x gain. And it went from a 56 cent to a $32 Bitcoin. Look how this bull market just made all the previous bull markets just look like a flat line. Keep that in mind. You'll notice that pattern happen many times. So in the bear market, it went from June 6th to November 14th of that same year, which means it took 5.5 months and the market crashed 94%. So it went from $32 down to $2 in just 5.5 months. So that's massive. That's like the first biggest crash ever in the cryptocurrency market. And most people during this time thought that there's no way this is ever going to recover and come back up. So let's look at the next bull market number 4. In bull market number 4, we see that if you guys look, all the previous bull markets are just flatline. And this is bull market number 3 right here. If you see these boxes, if it touches that line, that means that's when the bull market started. So in bull market number 2 started at this green line, and bull market number 3 started at this green line, vertical green line. So there it is right there. So that what we saw that was a huge mountain is now just a tiny anthill right here, because the market shot up again in this fourth bull market right here from the 14th of November to the 8th of April. And this is the longest bull market right here. It lasted 1.4 years, and there was a 13,240% gain, which is a 132x gain. Bull market number 4 is when our team entered the crypto markets. We first discovered crypto in October 2012 when I was working at an energy brokerage firm in the city of Dallas in America. And because of that, I did not know if Bitcoin was real or if it's a scam or if it's a fraud or if it's BS or what. So I took the Bitcoin white paper and sent it to my friend at that time, which is leonfu.com. And he read it and he went out and started buying some Bitcoins. So if you look here, this is where our team got into crypto. We got in late 2012, which is around here. That's where Leon got in. I got in after the market went up and then it crashed. The reason why I couldn't get in down here with Leon was because I did not know how to buy a Bitcoin. It was really, really difficult. It was extremely difficult. It took several days just to buy like a couple $100s worth of Bitcoins. And so I could not go through all that nonsense just to buy a few Bitcoins. So after it went up here and it crashed, and then I think I got in somewhere in here. I think somewhere in this area right here, or maybe even over here. It's been so long I forgot, but I know it's somewhere in here. So that's when I got in crypto for the first time. Okay, I bought my first crypto. I got in back here, but I didn't buy it until over here. So that was it crashed from $266 down to $65, and it only took 3 months to make that crash. Let's take a look at bull market number 5. That crash right there that you guys saw from $266 to $65, look at it. It looks like an anthill now. Everything before that is just a flat line. It took really long time to build up this bull market, because after the price crashed 94%, people didn't know if that was ever going to recover again. So that's why it took so long. But then it finally did it. And then also at the beginning of bull market number 5, I want you guys to pay attention that before this, the crash of Mt. Gox, like when Mt. Gox was available, I think 85 or 88% of the Bitcoins in the world were traded on Mt. Gox. I'm not sure if it was 85% or 88%, but I know for sure it was over 80%, okay, was traded on Mt. Gox. And afterwards, after they got hacked and it crashed in the beginning of 2014, then other exchanges started to come online. And so by then, I just want you guys to know that moving forward from here, the data is coming from Bitstamp data, and it's not Mt. Gox anymore. So I Photoshop the data from Bitstamp onto the chart of Mt. Gox so we can have a continuous chart here. So from here, bull market number 5, it went from July 1st to November 25th of the same year, okay, which took about 5 months, and the market grew 1,746%, which is about 17.5x, and it went from a $63 Bitcoin to an $1,100 63 Bitcoin. Now, the Bitstamp price says $1,163, but the reality was it was over $1,200 on Mt. Gox. Now, some people say that the all-time high at that time was $1,200, and some people say it's only $1,100, $1,163. And the reason is because even though Mt. Gox showed $1,200, there was no way you can really buy it. But on Bitstamp, you can actually buy the Bitcoins at this price or sell it at this price. So because of that, there's a large group of people that prefer the Bitstamp price of $1,100 versus the $1,200 on Mt. Gox. So either way, it's close enough, guys. I'm not going to make a big fuss over that. And then when the market crashed, it crashed from November 25th to January 12th of 2015, which means it took 14 months and the market crashed 87%. So far, we have all these crashes, and most of them are all over 50%. Let's take a look at the bull market number 6. So in bull market number 6, that $1,200 right here is now looks like a little small anthill compared to this run up to $20,000 in 2017. So in this bull market, it went from January 19th to December 11th. It took 3 years for this bull market to happen, and the market grew 12,804%, which is 128x. It took 3 years, went from $152 to $19,666 Bitcoin. And then when it crashed, right, it took 1 year, and it crashed from $19,666 down to a low of $3,122 for the Bitcoins. That's an 84% crash. Okay, so I want to share something with you guys here. If you guys look on this legend, 1x right here equals 100% gain, and M equals months. That's how many months it is, okay, right here. So if you guys look, the green represents the bull market, and the red represents the bear market. And the green represents the bull market, the red represents a bear market. If you notice in the first bull market, we had a 9x gain, took 4 months, and then we had a bear market that had a minus 66% crash, and then it only took a month. And then over here, number 2, we had a 5x gain, and then a 4-month time period for it to gain 5x. And then if you look closely, this second bull market here, or the second bear market here, or the second cycle is the only time that the entire market crashed only 49%. Took 4 months. So after that, everything else, the crashes were significantly bigger. If you want to look at it, you can look at it over here, right? During the bear market, the first one was 66%, minus 49, minus 94. So as you can see, guys, we can look at this and know for sure that the bull markets, they have at least a minimum of a 5x gain, and in the bear market, we have a minimum of a 50% crash or a 49% crash here. We'll just round it off to 50%. But if you look at here, right, you can see that the average is a minus 76% crash. And then the gain over here, the average is about a 58x gain. If you participated in all 6 bull markets before in the past, you would average a 58x gain in each bull market. And then you would average a minus 76% loss in each bear market. So that's how you read this chart. I made this so that you guys can understand how the markets crash, what's the average that you can expect in a bull market, and the average that we can expect in a bear market. Now, I will tell you this, I do not expect the crashes to change very much, because the worst crash that you can have is minus 100%, all right, where you lose the entire market. So that's as far as it goes. However, on the bull market side, it says here that an average of 58x gain, and I'm going to say that as the market matures and it gets bigger and bigger and gets more mature, this number is going to get smaller and smaller and smaller. That's what my opinion is, okay? But that doesn't mean it's true. That's just what my opinion is. As I'm making this video, we are currently in this 7th bull market, and we don't know how far it's going to go. It's all the way up here to 20,000 and pulled back, and actually, at the time that I'm making this video, the bull market, the price obviously has gone significantly higher than 20,000. It's gone up to like 67,000 and come back. You guys can see with just the 6 previous bull markets or the 6 previous market cycles, you guys can see what we can anticipate in the future of this. So I don't need to make a complete number 7 cycle over here or number 7 bull market for you guys to understand what's going on. This bottom row is more of what we're looking at here.